Final hour session just after 3 p.m. We are coming into the close. We had FOMC minutes today. Markets are little change for the day. Here we go. Opening bell right around 66.25. We're trading currently at 66.43. Plus minus on the day was about 50. So we're well within that. Daily profit play was a really nice trade. I'm sure there's some traders out there letting it go for a full winner. I closed out for about a 65% credit winner. Pretty happy with that. That was right before the FOMC news at 2 p.m. I think it closed out at like 115 for 30 to 35 cent debit. So overall happy with that. Defense trades not needed, not hit, not tested. So we had that initial rip to the upside. Market came right back down to center, and market makers did a great job today. So NVIDIA, it's really all that matters. We'll go into NVDA. It's up on the day 2.84% after about I don't know, 12 to 14% slide. I think we had a peak to trough about 16%. That was 15.6 coming down to the low around the, when was that? This candle's the 7th. So November 7th low, about a 16% correction. Expected earnings per share 1.25. I think the forecast is like a 1.29 and a 56 billion. So if they beat that, they beat top and bottom. Was that due to the market tomorrow morning? I mean, we'll see what this does overnight. You're going to see the post-market news. It'll probably pop up on StockTwits. It'll be trending. And coming into tomorrow morning, what are the futures market giving us? If NVIDIA is up, I mean, the plus minus on the day or for the week to Friday's expiration is about $12 to $13. Here is NVIDIA going out to Friday. So plus minus is about $12.30. Again, volatility, pretty high. So this actually is a little bit more elevated than norm. Just because generally earnings are not seeing a VIX at 23, and this is the number one company in the world with $4.5 trillion market cap. So there's a lot riding on it. I think that even with the expected move, we might see like a $300 billion move in market cap one way or the other, which is kind of insane. It's right now the size of this company, the size of NVIDIA is about 7% of the entire S&P right now. And, a good print is great. I just don't know if it's going to be able to regain or recapture the all-time highs. That would be a 13.8% move. The average earnings print is about 5.66%. So 5.66% is the average earnings move. Market maker showing about a 1230 or 1280, 1223. So 1223 is the plus minus for the market makers. I'll just put here expected move. And 5.66% at the current underlying price. So 566 times 186.86, about a 1057 move. 1057. And 1223 is from the broker. And we have an at the money straddle is around $13.30. So right now the premium to get directional on NVIDIA is actually more expensive than what the markets are expecting. I don't see, we're rarely surprised by the S&P moves. We're rarely surprised by the Nasdaq moves. This is, the largest company. It's super liquid. We're talking market cap, $4.54 trillion. It's going to move overnight. Question is it up or down? I think they're going to beat earnings. The market might take that as a way to stabilize this market right now. But obviously, you're looking at the same levels I am. So if we break below this level, and I think what really matters is price action tomorrow. If earnings are great and the market is pre-market way up here, then expect the S&P to be on a pretty big charge tomorrow. We'll calculate all the stuff in the morning for our daily profit play. We'll take into consideration the current VIX. We'll look at the market maker move. We'll calculate our highs and lows. But the market can put a big charge into the upside if NVIDIA kind of carries it with it, right? However, I think it's very difficult for NVIDIA to come immediately right back to highs. I don't think we're going to have that big of a surprise. There's too much liquidity around it. There's too much leverage around it. I think if anything, this move and what's been happening lately with market breadth is we are seeing a bit of a deleveraging in the markets. It could be toned down versus like just dumping and closing. If it was like a nasty deleveraging, we'd be at 10 plus percent correction already. I think of the S&P and the Nasdaq. So everything is pretty well contained with NVIDIA earnings. And does it stabilize things as we get into holiday trading? Next week is Thanksgiving. right? We have some U.S. data that's coming out. It's going to be all delayed and weird to weird to really see it. Like non-farm data is going to be tomorrow morning at 8:30, but it's September jobs. I mean, I don't think anybody cares at this point. We're talking, 60 days ago. Do those job numbers actually matter? They're relevant. And then the October jobs report might not ever be released or be released sometime in December by the BLS. So, we'll take it with a grain of salt. We'll see what futures does overnight. We'll see what futures do in the morning. NVIDIA after hours to throw into the mix of things. And that brings us to, tomorrow's session. So, 10.57 is the earnings expectation. Obviously, there's follow through there, but that's where the market average is. 1223 with the elevated VIX is the expected move from the broker by Friday. So we could have plus minus. Let's just round this to 12. We're trading around 186, almost 187. So upside around 198, 199. Downside about 174, 173 ish. And I could see prices still being inside of that. The at the money straddle at 1330. It's like people are directionally paying for a lot more. It wouldn't surprise me if there's a bunch of 200 calls that don't get profitable or not profitable unless you take the immediate profit or you have like the one kind of 173 to 170 puts that I just think if you hold them to expiration, they're probably both going to lose. But if you get an initial pop on this thing, if there's enough time in that trade, you might be able to get an instant win going into earnings tomorrow. So I'm just curious if we took a one-sided trade here. I'm probably not going to trade this thing, but if we did a one-sided trade and I just, a 185 by 187, it's $1.25 to make 250. If we're above this by Friday, we get to manage it Thursday, Friday. We can kind of see an instant win here. That's a lot cheaper and more cost effective than trying to just buy the call, right? If I buy the call at 185, my break even would be like 193, 194. So we'd have to have a pretty decent move to the upside. This bull call spread is a little bit more affordable. If I went like so, this is $1.15 to make 250. If we get up above 190, that's only expecting like a $3 to $4 move. I've got a plus or minus of 10 to 12. So I'm not going to take this trade, even though it's very low risk. I'm curious. What I can get for a trade. My idea would be if we do see a dump on NVIDIA, I'm probably going to take a stab at a bull call spread and see if it's very cheap and cost effective to be a gap fill. That to me is a better trade than guessing right here. If we go up and we stay, great. That's a win. $1.15 to make 250 is not bad, right? I risk $1.15. I can make 235 on the, actually, I guess I can make 135 on the winner. So risk 115 to make 250, so I can get 135 out of the risk of 115. I get 17% return if price goes up, right? So if we get a $5 to $6 to $7 move to the upside, that's an easy winner. We probably manage part of that profit into tomorrow and not even have to hold it till Friday. Personally, I'm going to wait and see how the dust settles. I want to see if price goes up. Great. The whole market lifts. We probably see a big recovery in the S&P and the Nasdaq. Maybe that stabilizes things, like I said, through Thanksgiving. We're coming into some holiday trading. There's going to be some, I don't know, some volatility, some noise as we're starting to see U.S. data released again. Markets, on kind of the brink, below the 50-day moving average. Same thing on NVIDIA, same thing on MAGs. All this stuff is sitting right here at some pretty critical spots. So NVIDIA is sitting right at the 50-day moving average. If we get above it and reclaim it, well, the good thing is the S&P and the Nasdaq should do the same thing. So if we can get above it and reclaim it, that might reignite the bulls to the upside and maybe pull back into some of these levels. Now, this correction, maybe it's high to low, lower high to lower low, lower high to lower low, right? We still might be in a correction phase right now in between, current prices, this October 10th low, which I think is a critical spot not to break. And we'll just kind of watch this thing unfold in the next maybe 30 to 60 days. By the end of the year, I think December 30th is within 60 days. Let's go to an expiration here. So last monthly expiration, December 26th is a Friday this year. And we do have some expirations. Yep. So the 26th of December is a Friday. And we have next week disrupted on Thursday. Markets are limited hours on Friday. You go into trading for the first part of December. Are we going to see the Friday non-farm data? Maybe it's going to be in the middle of December. We have the Fed on the 10th, which is likely going to be a pause. That's what the probabilities show right now. And then we get into, the 24th and 5th, it's 2-day disruption. The 26th, it's a 1-day expiration during the holidays. And then the next weekend of January, it's end of the year, New Year's, limited. It's like we only have, let's see how many weeks to trade. Next week is holiday disrupted. So we have one full week to kick off December. One, two, we have 3 weeks in December, and then 2 weeks interrupted with holiday trading. So, I mean, we're pretty much coming down to the wire of like whether this market can stabilize. And we have 3 weeks of full trading left, and the rest is all holiday trading. So, you know, I don't know. I don't think this is the time to make any crazy decisions. Um, I don't think the markets would really. I mean, the markets are capable of surprising. That is for sure. That's one thing that does make me a little leery about the holiday trading. Is if there's like a black box, you know, quant disruption where it's like everything's triggering sell trades. Well, yeah, it could get really ugly really quickly, right? Um, but at the same time, I look at this market, and I said this, if you took a look at this in my Telegram, I posted a video here that's about 18 minutes. Come take a look at it. I posted it in TradingView. I posted it in Twitter, on YouTube. I put it in Telegram, on my Discord. This is my consensus. I think all eyes on NVIDIA. We have US data. The Fed Watch tool, it's about a 50-50. That's actually split. It's now like 66% instead of a 50-50. But the point is, it feels like we're kind of on the brink in so many ways. Holiday trading can make things very, very messy and very noisy, because life happens. Like people want to travel, people want to enjoy the holidays in some semblance and not be stressed about their accounts. So I think having some steadiness and stability in the markets would be helpful for the holidays. Having a December massacre would possibly trigger some, I don't know, a flush down and then a big rip into the end of the year, and it's just going to be crazy volatility. But I think that this market might surprise us with the ability to win both ways. Bears can win in the near term, or we stabilize with NVIDIA and we work our way back to the highs, and its market just gets back to highs. Everyone takes a sigh of relief, enjoys the holidays, and then we come into January with a bit more consolidation, still potentially have that threat of a downside correction. It almost, I don't know, it's not going to be easy either way, but I think the easier trade, honestly, is just to have this market just struggle a little bit more, come down to the October 10th level, maybe have one flush and then work its way back up. And that would actually be like a sustained and almost an easier buy signal than it would be to have the market go up on NVIDIA, reclaim highs, and then watch the market stall again, come back down, stall again, come back down. I mean, that to me is more problematic when it's like, what are we going to do in 2026? I mean, if it consolidates, then sure, you look to see if it breaks highs and has the ability to go up. Maybe it does. If the Fed pauses in December but cuts rates in January, then maybe that's a tailwind for stocks. The big beautiful bill has a bunch of stuff hitting the markets and add liquidity to the system in Q1, Q2 of 2026. That could be a tailwind for stocks. So we'll see. Market breadth isn't doing any favors, right? S5FI, this market breadth indicator, not doing us any favors. We only have about 35, almost 36% of stocks above the 50-day moving average. So since the peak here, look at RSP. Summer of this year, RSP has been topped out. Market breadth, we have only, literally, we have 65% of stocks below their 50-day moving average. That's a massive, like a yellow caution sign, right? So not a lot of the market is bullish. Look at the SPY, look at the QQQ, look at NVIDIA, look at some Mag 7s. Yeah, they're hanging out above there. If they're part of the 35% that's above the 50-day, well, they're big enough to control the entire market, so they might stabilize and keep things afloat. But this isn't a good thing. This isn't a good sign at all, actually. So does the market breadth, have a big return to the end of the year? Maybe. That's a big question mark. How many stocks are above the 200-day? About 52%. So this is why I say, I think the brink is an appropriate word, because if all of a sudden the market breadth below the 200-day breaks, where all of a sudden we're only 45% of stocks above the 200-day, 40% of stocks above the 200-day. Now we're talking things are crossing below the 50-day, things are crossing below the 200-day, and everything looks like it's postured bearish, and that's not going to be good. So staying above the 200-day I think is important. And hopefully seeing, the market breadth stabilizing here versus just getting worse. I mean, if you're seeing market breadth deteriorate, that's not bad. That's not a good thing. But take a look, like I said, SPY, Qs, Mag 7, individually, it's below the 50-day. Okay. But if it gets back above it, this is big enough with market cap to drag the whole market with it. Here's the RSP that I talked about. This is equal weight. Okay. We have not made a new high since October. High, fall. That's crazy, right? That's the October 3rd all-time high. October 10th, everyone knows that sell-off day, we came right back up to retest. Now, the SPY made new highs the RSP tested and failed. Okay. So is there still support here? Yeah, there is. What would be a little bit more concerning would be if the equal weight continues to go lower, and we're talking about just a big fib number here. So take your low, take your high, and look at your fib levels. So we have a 23%, we have a 30%, we have a 38%. These are all retracement levels that I tend to use. 23% supports this market pretty firmly. If it's going to bottom out here and try to make its way back up to the highs, that would be a nice like market breadth end of your rally if we can get that. 30, this would be your 23% there. That also coincides with a previous level of resistance. If we come back a little bit deeper, 30 and 38%, there's still about a 60% chance that that retracement gets us back to all-time highs. So I am not like thinking that the bears just roll on this market and take everything down with them. I mean, I don't think the narrative is that strong and that sustainable when the economy is still somewhat resilient. Mag 7 companies are huge and almost, I don't know, they're almost impervious to the flaws in the market right now. It's like even if market cap struggles, Mag 7 is still pretty impressive. Necessary rotation, yeah, maybe in 2026, maybe. But either way, it's going to be tricky if the market wants to roll out and roll away from Mag 7. If we rotate out of that, there is no way that it's easy. It's going to be painful to see things rotate out of Mag 7. That's literally what this year was. Okay, for a second, like this year was a rotation out of Mag 7 into this area. Okay, this decline that started in February was a rotation in Mag 7. That was scary. You throw a trade war on top of that, that's why it got so bad. Okay, but you can see that it quickly pivoted. All of a sudden, it's right back into Mag 7. You had multi-year discounts offered up in the matter of 60 days, essentially from late February into April. If you go out from February to end of April, you essentially recover the entire move. And here we are back at where this whole nonsense started, and then all the way to all-time highs. So this was what the rotation started at. It started with a Mag 7 rotation, and then accelerated to the downside with a trade war, V bottom, and off we go. So what I'm saying is, if we see something similar to this Mag 7 rotation was good for a 10% correction. Okay, so if we do that again, and it's good for another 10% correction, if there truly is a rotation out of Mag 7, this down to the 200-day moving average is a 9.29% correction. That would, I mean, to me, that lines up very cleanly. I think if we have a Mag 7 rotation without a trade war, we have a correction, maybe down to the tune of 10% or so, and then the market stabilizes and works its way back up. That to me is a healthier look going into 2026 than it would be if we're sitting here at all-time highs heading into the new year. So I'm not saying that I want to enjoy a market declining into the end of the year. I don't want to see the market down 10% to finish the year, because essentially we're going to finish flat. I mean, we're hanging on to, year to date is 12.5% right now. Let's go to the yearly candle. Actually, let's just do this. From the time this year started, let's go, January was somewhere in here. Where's my January trading? So this is where my mouse is right now. This is roughly where the year started. Okay. So if we get back to this level from all-time highs, if the market were to correct about 14 to 15%, we're giving back all the gains for the year. So a correction of, 9 to 10%, we still cling to a positive year. Maybe the market has this flush down, bottoms out, excuse me, and then rallies its way back up to kind of stabilize the double-digit gain for the year. Right. So again, I'm speculating, but I almost think it would be easier for the market to have this correction and just get it over with. Get the correction over with, have it be somewhat orderly, somewhat organized, market finds some stability, and then we work our way back up. Because I see that as a trading opportunity as opposed to, I've got to rotate out of this. I mean, it's just a correction, right? It's still, broadly supported. We have previous resistance here to offer some support. We got some Fibonacci levels. We got some good dynamic support in the moving averages. But it's noisier if we're instantly back above the 50-day, market reclaims the highs. I mean, I'm not that far from thinking, man, this broadening pattern might be the pattern, right? We might come back up and maybe poke these highs again and then fall back down to some fresh lows. And that's difficult. We hit highs and the market falls. We hit lows, the market rallies up. Like, that is a noisy pattern that can definitely take shape. Okay. All right. Let's see. Year-end's going to be interesting. Yeah, I mean, it'll be interesting. Like I said, the scary part is that it's typically low volume, low liquidity, and it's pretty passive. Like, the end of the year is pretty passive. We're not going to force a bunch of trades through my daily services. Like we're going to be in session unless it's a holiday. We'll be in session. Um, but the markets can do some pretty silly things. They can get very one-sided. We experienced this a couple times last year because we were trading, all the way through the holidays. But we have a different tactic this time for, especially daily profit plays for waterfall income. So if things are stable, waterfall income looks great. We have a lot of buffers in there from 5% lower to from peak to trough, like 5% corrections, 8% corrections, 10% corrections, 12% corrections, 15% corrections. We've been stacking in some trades. So if we stay stable, waterfall looks good for another $5 to $10 credit by the end of the year, which I'm totally happy with. If the market comes lower and still has a rally into the end of the year, same type of thing. As long as we are sitting at 663 or higher, or 670 or higher, highs in the SPY at 690, SPY, or I'm sorry, the SPX highs at 6920. I mean, I've asked this question for the last several weeks, like, how many of you think that the market by end of year will be higher? And everybody said higher. Like, if I've got a class of 100 students, I didn't see anybody say lower, and I get it. Like, that can be a pretty easy consensus to think the market will kind of rally into the end of the year. Historically, the market's bullish. We've had an interesting shift in seasonality because there was no pullback. I mean, this July August pullback was really nothing. This little August pullback was really nothing. September virtually had zero pullbacks outside of a 2-day decline that was quickly picked up, right? And then you go to October 10th, that was a little bit more meaningful, but I think that was like a one-off, like de-risking. I think that also triggered a big top in the currency market as well, or the cryptocurrency market, which has probably been the plaguing factor of 2025. Is Bitcoin is disappointed in a big way. I think that there are a lot of profits being taken. I think that there are, it's an interesting time to see that there's been so much mainstream adoption with cryptocurrency, i.e., Bitcoin. You had Tom Lee pounding the table on doing the same thing with what Michael Saylor's done with MicroStrategy and Bitcoin, but you got Tom Lee talking about doing the same thing with Ethereum, both of which are underperforming. And year to date wise, I think they're both in red. Bitcoin's officially turned red from like a 30+% year. Ethereum, I think, is maybe flat. I think it's retracing a little bit, but we have a pro crypto administration, and yet the crypto landscape is doing pretty terrible right now. And on top of that, technically, it has been falling into some really nasty levels. Like, we are now getting a death cross where the 50 period has crossed over the 200. And, I have no interest in adding new exposure right now, even though I think, hey, it's a 30% discount. It would be great to own some, but I also don't know how ugly this gets to the downside. I don't know where the market's going to kind of catch the bottom. I don't know risk appetite returns. One thing I was looking at today is the increase in money supply. M2 US and Eurozone and China and Japan all at highs in money supply. I mean, I think this finds its way into the system in some way, shape, or form. I think 2026 is a year of fiscal spending. I think it's a year of fiscal dominance. I think for the first half of the year, especially, the U.S. is going to still be spending. I think that the political risk in fall 2026 could be something notable, something interesting, something somewhat uncertain. But if we have the Eurozone spending money, Japan with a pretty dovish prime minister and a pretty accommodative monetary policy, and the Nikkei at all-time highs, China's looking to kind of revamp their property markets, and they've done the ventilation. They're backstopping the property markets and their stock markets. I think that it's hard for money to just leave the system. So, crypto has been an interesting space where it's been so mainstream. It's become almost like, hey, financial advisors now offering crypto. JP Morgan, Fidelity, Tasty Trade has it. All these brokers have it. Like, now you can just buy an ETF that's backed by BlackRock, but it's not performing well, right? So, it's surprising to see, gold's up 40-50% for the year. The S&P and the Nasdaq clinging to double-digit gains. Bitcoin's now red. It's been red in the past. We obviously, if you've been in crypto for anywhere the last 5+ years, 10+ years, you've seen some big pullbacks. I've traded 70+% pullbacks in Bitcoin. Doesn't mean that I like it. Doesn't mean that it's fun, because now I'm wondering, like, are we about to see a 50% correction in Bitcoin? Maybe. I hope we're not, but who knows? Watch the Nasdaq, right? So anyway, what else? Stalling example you gave, pretty much last year's S&P price action, November to February. Yep, I know. And it could be similar. Like, the market just kind of, oscillates back and forth, not really highs, not really lows. But like I said, I think it's just important to watch that the SPY right at the 50-day moving average. Okay, right at the 50-day moving average. It's important right now in the near term for the bulls to reclaim this. So, two key levels. If we can get above the 50-day, then there's room for the market to kind of catch its breath and say, okay, we just protected ourselves from about a 5% correction, and we're not taking out that October 10th low, which was a pretty big de-risking candle. Um, but if we're above that, does it just work its way back up? Does it work its way back down? What drama do we have ahead? Well, the US is going to roll out some data. We're finish up the month of November. We have Thanksgiving next week, limited trading, but the US data is coming out tomorrow, and we'll get it in a couple weeks in December. December 10th is the Fed. If they continue to push the probabilities of pausing, the markets may not like that. It might be a very noisy December because the Fed's not going to make any decision to cut rates, even though they will probably turn around and cut rates in January and probably again in March or April. So it's just it could be so much noise and mean actually nothing, but it doesn't mean that we can't be 5 or 10% lower than where we are. So that's what I'm trying to prepare for. Is I don't want the market to be down here and have no reaction to the upside, right? If the market's going to be down here, I want to see the market actually care enough to push this thing back up, right? And if the market is going to go up first, I want to care enough that the market, if we do test these highs again, that we're not just dumping all the way back down without having the market care to get it back up to these highs. So yes, sideways could be the next 30 to 60 days, and I am prepared for that. But at the same time, there's a lot riding on NVIDIA earnings today. There's a lot riding on the Fed in December 10th. There's a lot riding on whatever data we do actually get. Does the market actually care? Does it care that we have inflation data coming in the next 60 days? Does it care that we have two rounds of non-farm payroll to play catch up with the Bureau of Labor Statistics? I don't know. So, what do you think about Meta stock? It sucks. I'm long with a bull call spread. I'm looking to see if we get some type of rally into the end of the year. April, yeah, but we're not near April lows. If we're going to trade, this is like Meta to me is, April lows, probably put in some ratio spreads. The crazy part is Meta is an advertising company that is now trying to, play the AI space. And I think similar to how Meta got beat up so badly with the metaverse spending, I think they're now getting beat up with the AI spending. They are an advertising company. That's it. And yes, they make a lot of money, but they are spending like 30 to 35% of the revenue on an AI build out. And I get they don't want to be left behind, but I certainly think that it's silly to look at the ROI if their spending is so high and they have little to no revenue to show for it to make up for that CapEx spending. So I'm not that interested, to be honest. It's been falling. We do have a gap fill. I'm hoping I can have a defined risk trade where we get back above like 610, 615 at the end of the year. So maybe this stabilizes. But again, we are below the 200-day moving average. The 50 is crossing over. We're actually very close to getting the 50-day and the 200 crossing as well, which doesn't look like a good trade. So if I was going to look left on the chart, then I would actually use the April lows, and I would use this level back into I guess April in August of 2024 when the market had some flushes. If I'm going to take on some risk in Meta, maybe it's in here. But if there is a de-risking, I vividly remember watching Meta go down 70+% 2022. So that is a long ways away from here are highs on Meta. Here's a little, 40% pullback. What if we double that? What if we pull back 60, 70, 80%? Well, I have no interest in owning a stock that's already at $587 and watching another 30 to 50% drawdown. So, I took a defined risk trade. I hope it pays. If it doesn't, I'll take a $240 loss, and that's it. The rest of my exposure to Meta is going to be give me a huge discount and let me see when this thing is back to like fair market value. But maybe it's way down here. Maybe it's previous all-time highs. Maybe it's like a sub 400 stock. Let me look and see what I have for Meta here for discounted cash flow. Meta platforms. According to this, it's still strong. It's just I think this AI spending is just burning. It's 25 times earnings, which for the Mag 7 is somewhat low. A lot of the Mag 7s are like in the 30s right now. But current price, we're lower than that. We're at 587. But fair value at over $1,000. So if it's cheap enough, sure. But I think you've got to be prepared for something ridiculous. Like, what would this pattern look like? Right? What's that pattern? Well, you've got a short-term opportunity to get long in here, but if we fail to take out these highs, this is a massive topping pattern that maybe sets up for big trend, topping pattern to retrace, build in this correction, and then we go to all-time highs later. And this is a, multi-year cycle that has to play out, right? So, I mean, if I'm looking at prices here, I would say between about $400, I'd say between 400 and 200. If I said, okay, level 1 400, level 2 300, and level 3 200, and we get back to these all-time highs or go to higher highs, great. I can take some naked puts in here. I can collect some premium. I can do some ratio spreads. I can do some debit spreads. I can position for this. I can also buy the shares. But that's probably where I'm interested in trading it. And I could be wrong. Like this thing could just turn right up and right back to the upside we go. Which, if I get that, great little bull call spread. But if it's going to just continue to unravel, I'm not going to risk a bunch and try to say like the bottom has to be near, right? It doesn't. I mean, this level might offer some previous resistance becoming support. It might get really ugly. And like I said, a 2022 correction that was down 70+%. I am prepared for something ugly like that if it happens, especially the general market, the broader market, and there's a Mag 7 rotation. It could hurt Meta in a big way. So I'm just not in a hurry. I mean, I'm 56, 57% cash. I do want to do some maintenance on some of my Bitcoin positions because I have some ownership. I might take on some more shares, but I'm going to basically immediately repair them and just try to flip. It'd be 400 shares. I would flip them for basically $500,000 and just get it out of premium. And then I still have base position that I'm going to hang on to a little bit. But let's see here. I'm looking at some trending stuff on StockTwits. Block Inc. is up almost 5% right now. Nvidia earnings coming at the end of the day. We'll see what that does. Futures market overnight, couple things. So we have Nvidia earnings to think about for tomorrow morning before the open. We have non-farm payroll data coming at 8:30 a.m. We'll see what that does to the market in the morning. So I'll be watching futures. I'll be live for my daily profit play in the morning at 9 a.m. So we'll have futures. We'll have non-farm payroll. We'll see what Nvidia earnings did, whether they beat or not. I'm assuming they're going to beat. It's just a matter of what's post-market movement, what's futures doing overnight, what's pre-market look like tomorrow morning. Are we actually hitting the $10, $11, $12 expected move that the brokers are planning for, or is it going to be like a big nothing burger? I don't know. We'll find out tomorrow. Yeah. So, anywho, that's where I'm at. What are the charts? What are the questions? Currency strength today. It's all about the dollar. Dollar index has been heading higher. Certainly today, the last couple of days has been a little bit stronger dollar. This is an interesting spot for the dollar. I also think this is another one that's kind of on the cusp, right? If the dollar breaks above this level, I think the dollar breaking above this level is going to be risk off trading. So I think the stock market has more to fall if the dollar gets stronger and we have a decent push above 100 into like 102. I think that is going to be a bit of an uncrowding of this trade. And obviously, from this level, it's been a great spot to be long the dollar since this low, right? And I did say, like, I don't think the dollar is going to be bearish at these lows. Consider getting long. Euro dollar is a great time to short. Pound dollar has been shorted nicely. Aussie dollar, New Zealand dollar, dollar CAD, all have been doing pretty well. Dollar yen's up to fresh highs as well. So if we continue to go up on the dollar, I think there's a risk off trade in the equities market. If this area, which is now plenty of resistance, this is a 200-day moving average. This is a 10-month or 10-period monthly average. If this holds and pushes prices back down, then I think we have risk on trading in the equities market versus a risk off trading in the equities market. So this is a gauge for how I can kind of position for the end of the year. It would be a little bit easier to see things go risk on in the equities market versus off. But if you're trading currencies, currencies can be a pretty good hedge. Dollar strength could be a pretty good hedge, right? So something to consider. Oil. I think I have one trade in for oil futures, and it's up like $180, $190 of the 220 max. It is expiring in December. So it's up 180. I'm up 81.8% of max credit. It's worth $2.20, which is $220. The reason I'm not closing this trade out right now to take my 81% profit is because I do have a profit trap and I still have a 98% chance of profit. So we'd have to have an outlier type move in order for this trade to be threatened for me to not collect my full $220. And on top of that, I have a $500 bonus trap as well. So my break even is 49.50. And that on the options chain, if I go out to the December 16th. So December 16th, right here on the options chain, I'm trading this thing at a like a 5 delta. So it's, we'd have to have like an outlier type move at the end of the year. And I just again, probability wise, I don't see that happening. So I'm going to hang on to this trade for the full 220. I can just expire for full credit on December 16th. But if we do push down a little bit lower, I also have this potential profit trap that could pay another $500. And maybe I can grab some profit there, but not in a hurry. Okay, what else? Gold and silver. Natural gas is up. I haven't done anything with a diagonal spread. I am long natural gas with a UNG. I have a $5 call, which was deep in the money, and I want to see if this will come back up into the 20s. If it goes back into the 20s, I'm probably going to sell a call against my long call and take the profit. That would probably be like a 150 to 200% gain, if not more, because I've been, as we were falling here, as natural gas was falling here, I was selling calls, selling calls, selling calls. My break even on this is like, I think it's $10. So if my break even is $10 and this thing can flush up to, let's say 23, well, that's more than 100% on my position. And if I sell a call on top of that, I can juice that profit a little bit with that premium. So I'd like to see if natural gas can get a squeeze to the upside, and I'll take some profit. I'm not super long on UNG other than getting this trade to range. So from the lows, try to find $23, $24, get out of the trade, double my profit, and work. I don't know, get out of the trade essentially, and then I'll brace for either a retest of the lows or look at oil, look at something different. But hopefully natural gas cooperates. Gold and silver. I was in a session with Nick today with A1 Trading, and I really think that for my dollar allocation and dollar cost averaging and my income trades I have on gold and silver, I am like permanently bullish on both of them. It's just a matter of being patient right now because I'm not in a hurry to buy gold when we still have a 530 plus bar count on the 200 moving average. So if anything, gold is probably here, and it might force traders to kind of make a decision and look at this indecision, but it's just as easy to hit the highs as it is to drop to the lows. I just think that this price will act. This will be a magnet to price. If you can look at the 200-day moving average, look, I don't care if we retest the highs. I don't think we go much higher because this will be a magnet. Okay, I'm making little squiggly lines here like it's having the magnetic force. There's your magnet. So even if we go up to retest the highs like silver did, I still think that we fall and we still have accumulation or consolidation, right? It would almost be easier to see gold work its way lower. And again, this is another thing I look at the dollar. If the dollar breaks and goes above 100.50, 101, 102, gold gets beat up, right? I'm trying to think what other catalysts we could see for gold. If the Fed pauses and for whatever reason, in the near term, the market's like, oh boy, the Fed's not going to cut rates and gold sells off. I don't know. But I think this is mostly the dollar. If the dollar gets stronger, gold drops. But I'm bullish on gold. I'm just, I closed out a nice campaign trade on gold and silver for like the last 3 years. I'm not in a hurry to go back and put an immediate allocation in. I'm going to be patient. I'm going to dollar cost average in, and I'll start sprinkling in my income trades at levels that I think are appropriate. So, trading, gold futures, trading gold, trading silver, silver futures, and silver. Watching these carefully. I'm also trading PHYS and CEF. I've dollar cost averaging those. Here's Bitcoin down to some fresh lows today, 89K. It's not fun. Like I said, I'm going to start repairing some of my Bitcoin exposure and selling some premium. It's been helpful to kind of lower the cost basis, but I'm still in like a pretty ugly drawdown. I mean, again, my allocation is like 5% Bitcoin, but it's still annoying to see that rather than it generating alpha to my portfolio, it's now been like a lagging performer. It was up 35% for the year, and now it's down freaking 5 or 10%. So it sucks. It's taken away a decent chunk of my gains. More than what I want. So I'll see. But my job is to repair. My job is to manage, and we'll figure out how ugly Bitcoin gets. If Nvidia goes risk on, and all of a sudden the Qs get back up to the 50-day moving average, this could quickly recover. I saw this was pretty interesting. I posted this today. Let me find in my Slack channel here. I found the betting markets. Let me find it. Oh, here it is. So there was an interesting bet. I think this is on Polymarket, but Bitcoin getting back to 110,000 by the end of the year. So you can see the bet here. What price of Bitcoin hit in 2025? So getting back to 110. Uh, I mean, it's like 3 to 1 odds if it gets there. I mean, again, it's probably low probability, but it pays well if it does. So if we go from 90 to 110, that's a heck of a trade. Now, is this how I trade? Is gamble on poly market? No, I don't even trade this ever. But it's clearly becoming a more important um, measurement of like where things are at. Who's the next Fed chair? What's Powell going to get fired? What's Trump going to say? It's kind of crazy, you know. So let's see here. Yeah, it's pretty nuts, right? Short-term bearish, long-term bullish, gold, silver. Yeah, I mean, again, and I think being bearish it's not. I mean, being bearish gold and silver is not going to help anybody. I mean, unless you're very tactical and you're trading for like literally short-term trades. I mean, look, where would I get bearish? If we came up to the top again, I'd be bearish and see if that's a tactical trade. That's it. Like right now, would I short gold? Of course not. I would just wait. If gold is going to be, settling in and finding some moving averages, then let's just scoop up some gold. Let's scoop it up, have resistance become support. Let this thing just kind of work. Let's just say it takes time, right? If it just goes sideways, goes sideways, goes sideways, goes sideways, if it just waits, consolidates, all of a sudden breaks a trend line and off we go, just accumulate, you know? So I'm not bearish. I think that I'd like to see a pullback. I'd like to just get it over with. We have this huge rip. We've had a multi-year bull run. If we go high, low, lower, high, lower, low, I want to scoop up some gold. I'll wait it out and I'll look for some confirmation and I'll stack up some more positions over here. And maybe this thing is like a great investment, but I don't know if this is a year later or 5 years later or 10 years later. I mean, do I think gold can get to 10K? Sure. How long does it take to get there? I have no idea. So it's gold is not the same as the S&P. Gold's not the same as the Nasdaq. Risk on, risk off. I mean, sometimes it acts as a hedge. Sometimes it consolidates for months on end, sometimes years. So it's just funny, like all these, permanent gold buyers that have been sitting watching lackluster returns for years, are all of a sudden like now. I mean, that's like the old school crypto crowd. They got the laser eyes or the gold eyes now. It's great, but it's been years in the making. So I think you got to be patient. I mean, I took a 3-year campaign trade and finally decided it was time to take profit. So I'm happy with that. But I want to get back in. It's now just become a percentage allocation. Chinese stocks, to take a look at that. Yep, give me a second. They had to bet to see if the Saudi king would wear blacks. They can bet on anything. All right. People betting on him. Yeah, I know. All right, let's take a look at Chinese stocks. Let's go HSI for Hang Seng. We can go index here. Again, kind of stalling at the top. I mean, just take a look at the global stuff. Let's look at Indy or Inda. It's INDA, right? It's India. Yeah. So the iShares, India is hanging in there, but pretty sideways since July. Like hasn't reclaimed highs since July. Take a look at China. So we've had a couple of highs here. Posture wise, it looks pretty good. I mean, there's a lot of dynamic support. As long as if we see like either this level continues to kind of, work its way up above the 50 and then we make fresh highs, or it's going to go sideways for a little bit longer and consolidate and then make its way up. But the broader support is if we have a pullback. I know this is ugly because this was Liberation Day stuff, but if we pull back below the 200 and then back above it, that to me is a great buying opportunity to reclaim these highs and stay in the direction of the trend. Right? So from this low in 2024, China looks pretty good. And I know some people like don't want to touch China at all, but I don't mind it. HSI is not a bad trade. Baidu and Baba, I'm still long on both of those. And I've got some chart alarms. I'm not trying to hang on to these very long. I look at China as a way to rent stocks, not own them. Like I literally will trade this for 6 to 12 months. If I get what I want profit wise, I get out of it. Some of it's income trading with options. Some of it's, I own shares. I have shares of Baidu still, and I've got to take profit sitting at 145. So if we come back to this high, I'll take profit. And I'm in this thing for a break even of like $70. So that's a good investment. I hope we get my profit target, and perhaps there's more to it. What is crazy to me is if I like Baidu enough, and part of me wishes that I did, but I don't. is that we get to this technical level and this becomes a profit target, but also the real measurement is up here. So having shares at $70, profit target one, I might dump half the shares and let the other half run to finish out this double bottom formation. And that's a wait and see. But if we're up here and I can decide, you know what, do I want to take the profit? Yes, no, maybe so. That's my decision and my discretion. But technically speaking, this is why I've liked Baidu for so long, because we have such good, strong support down here that even if we get back to 155 or 157, that's a great profit target. If we have this be a double bottom and it gets back even to this run that we saw back in 2021 before the massive deleveraging, it's like, yeah, we've got a measure move at 240. So that's a huge opportunity. I just don't know if I like it that much. Okay. Take a look at Alibaba. Okay. We're trading at one. I did take a lot of profit on Alibaba. I was in this thing with a break even in the low 70s again. This one did. This is how I measure the move. Take a look at your head and shoulders pattern. So this was a left shoulder head to neckline. It didn't come down to a double bottom, so I didn't measure it as double bottom. But because this was a head and shoulders, this was a long, long, long build for this right shoulder. But once we broke above it, it was messy and noisy. But measure the move. And did we get there? Yes or no? I'll use a box on here, so I'm not just making up these lines. Here's my low. Here's my high. Let me use my box tool here. Take the low, take the high. Okay, and then go above the neckline. And where did we stop? Let me delete all my garbage here. Everybody see that? So you take the low to the high, break this neckline. Did Alibaba at the measured move get there? Yes. And did it climb from there as a measured move? Yes. Where did I take profit? This high was measured at 186. I was out at 175 to be safe. So my run from the 80s and 90s, when this thing was up into the 170s and 80s, I took profit. Like, I'm done with Alibaba. Do I think we could still continue? Sure. Draw a trend line out here, right? Price could come back to the 200-day moving average, work our way back through it again, and maybe it's just a nasty channel of volatility, but it still goes higher. Okay, I have no idea. But this, to me, was a great trade. I took some profit, and now I'm looking to see if Baidu would do the same thing. Maybe it does. Okay, JD, I've got some JD.com exposure. We're trading at 29. I collected a decent amount of premium on some calls. I did roll my strikes up to 41. What I'm going to do right now, let's see what my break even is. JD.com. Let's go. So my break even on JD is 31.65. This December expiration that I have, if it expires, I'm just going to go a little bit tighter to price. I have 1,500 shares of JD. I think I just go all my accounts here. So JD is, where's it at? There. So I have 1,500 shares. 41's my call. This is out 30 days. This thing's up 95%. I mean, I could just take most of the profit now and be done with it and get out of there for $1.70, close this thing down for, I mean, it's a good amount of profit. So 170. Let's see, times. So I can get out of this for like a 10-cent debit. I get $1.71. I get out for 10 cents. That would increase my cost basis by 10 cents, but now I can roll my strikes maybe at the 32 or 33, which right now, if I go out to the end of the year, and this might be silly, I might be sacrificing some of the upside, but if I go to same expiration and I roll my strikes to December 19th, let me go to January 16th, maybe January 2nd. I mean, that premium is just not good. So maybe the 16th, a little bit better. Little bit, but not great. So I might just treat it as a repair trade. I mean, I'm probably going to be able to make a safe $500 to $1,000 on the position. But I also will see, like, if we have some type of year-end rally or beginning of 2026 and the market goes back up, then, I don't mind getting it called away higher. It's like, I mean, I want to try not to like choke off the profits, but I still like JD overall. I mean, even on this one here, JD should be JD.com. Yes. Snowflake looks pretty good. Trading well below estimated values, forecasted to grow. It's not super expensive price to earnings. I mean, 9 times earnings and fair value 60. It's like, yeah, I'd love to see this thing at 50, 60 bucks. But if I can get it called away at 35 or 40, I'm also happy with that as a trade. Okay. All right. So that's some China stuff. Dividends, growth, like I said, non-US, SCHY. That's a good way that I trade some non-US. This one also to me looks postured pretty bullish. This is a pretty good diversification. You have Europe, Asia, Oceania, North America. You got some India in there. It's like everything non-US. It is up year to date. Year to date, it's up 23.61%. That's not freaking bad. So international stocks have done pretty darn well. And that to me, I mean, when you look at the S&P at 12.5%, this thing's up almost double. Yeah, I like some international stocks. And this is also a cheap ETF that's only, 28 bucks. So it's a pretty good way to get exposed without having to pick an individual index or trade something that's less liquid. This is a little bit of a basket that's non-US based. So I would take that, and I do like it. So I've got some SCHY. I'm keeping it and hanging in there a little bit. What I think I still have I think I have like 1,000 shares, maybe SCHY. Yeah. So I'm going to get back in. I'm going to add some more. I've got a couple more accounts that were added in. I'm going to dollar cost average into some SCHY. I think international stocks can do pretty well. We're getting some fiscal policy internationally that hasn't happened in a long time. I think US could be stable, maybe difficult to grow like exponentially, but a stable US could still be good for international. So who knows? Maybe this like really outperforms. What else? Price on the day. Full winner on daily profit play if you held it. I got out for a 65-cent winner. We'll come in and tackle the markets tomorrow. Nvidia, I'm not seeing anything right now. Any headline news, any earnings. See, report fiscal Wednesday with projected 56% revenue rise to 54.9 billion, fueled by AI chip sales. Focus on data center demand. Yeah, I don't know, man. Let's see what it does. Like I said, I'm just looking at the numbers from the market maker move and the broker, as well as the 5.6% average move over the last like 20 plus earnings. So I'm looking at a calculated like $10.50 to maybe 12 and change. I think it'd be a surprise to have this thing rip up like 15 to 20 bucks and stay there. If anything, I almost feel a reason to, if we gap lower, I'm going to buy the dip. If we rip higher, I might take a bear call spread at the top. Might. That also feels pretty stupid. So it might just be don't trade it, watch it, see what happens, see if the market can be saved by Nvidia. EWA, I haven't traded Australia like that. I traded EWZ, which is Brazil. Brazil is up. ILF is Latin America. I'm in both of those. Those are long. I've been long since the bottom here in the 20s. So those are doing pretty well. EWA, Australia. Yeah, I mean, it's down. It looks just like the Aussie dollar to me. I mean, if you want to trade Australia, then trade the Aussie dollar. Kind of looks the exact same. In fact, the Aussie dollar is even less volatile. So anyway, we'll see. But I don't really have a compelling Australian bullish case, to be honest. If Australia is down here at $21, I'll get long Australia. Otherwise, I'd rather have the mix in the international basket. Let all countries kind of lead the way. If it's China led, if it's Euro led, if it's India led, if it's just anything non-US, let's see where the tide gets lifted. So, yeah, I think international is pretty good exposure for 2026. All right. So here's the deal. Tomorrow morning, 9 a.m. Eastern time, everyone's welcome to join. As always, Daily Profit Plan runs in the mornings. I'm running a Zoom session. I dual stream this where I'm on youtube.com/financial wars at 9 a.m. We get a game plan for the day like we did here. We had a nice winner on Daily Profit Play today. Those defense trades weren't needed. We didn't go too high. We didn't go too low. We stayed right in the middle despite the initial surge. We got through FOMC minutes. It was just kind of a, like I said, nothing burger where nothing really changed. The probability of cuts from the Fed didn't really change much. Even if they pause in December, you can still see that the probability is they're going to cut at least twice going into 2026. So that's what it looks like. So this December is like, I don't know, stand your ground. It's Powell's, last hurrah. Like, I'm independent. This is what I want to do. I think that a lot of Fed members right now are showing that they don't know. There's more divide and rift in the Fed than there's been in a long time. And when Powell is resigning or stepping down in 2026, I don't think he's going to get fired, but he just steps down. It's like, I don't know how the academic side of it changes. We're talking about like, screw the Fed. They're too reactive. They don't do anything. They've made policy mistakes. There's a better way to kind of automate the monetary policy process by letting the free market handle it. letting bonds handle it, letting yields handle it, letting real inflation numbers handle it. Is that ever going to happen? Probably not. So it's very much a part of what we do. And if you want to say that the Fed is worthless, then we probably would have had way worse crises than we did over the last 25 years. So there's still a backstop when the markets probably need it the most, but certainly a lot of pain to be felt. If the market's going to be backstopped by the Fed, we're probably down 20, 30%. So I don't think the Fed put is anywhere close to like current prices. I think the Trump put is close to current prices. I think the Trump put is, hey, we're down 5%. Trump's got to say something. 10%. Trump's got to say something, and he will say something. It's just a matter, does the market respond to it? We could have a very noisy end of the year. I hope that we don't. I hope everyone can enjoy it's just some simple, straightforward, positive drift holiday trading. That would be pretty fantastic. But man, we have some of the most ridiculous left tail and right tail forecasts. And the scary part is both of them could be right. We can have this rip to the end of the year that just doesn't stop, and we can have a complete collapse. And somewhere there's probably what really happens, whether it's the extreme left or the extreme right, or it's somewhere in the middle where price doesn't do anything. But we're going to figure it out because we got to be here and trade every day. So do you think non-par payroll could shift the needle as far as Fed? I mean, I don't know. The Fed's already looking at a pause. So the only way that the non-farm would move the needle if it's terrible, right? If non-farm payroll tomorrow is so bad that the Fed's like, all right, man, we get it. These labor numbers, even though they're delayed, are so bad. Let's get ahead of this thing. Let's start cutting some rates. Sure, I could see that. And that's a weird way the market can spin the news. If we come in, so the forecast tomorrow, I think on Bloomberg shows 62K. This is tomorrow morning. This is going to be the September data, not the October data, by the way. So non-farm 55K. I think FOREX Factory shows it at 52. Tomorrow at 53. So 53K and 55K. And then we want to look at the average. The average hours want to look at the unemployment rate. So the two big data points is our job numbers for non-farm and our unemployment rate. Okay. So we want to see these private payrolls. I'll see that as well. And, if it's a big miss, let's say we come in at 30 or 20, or heaven forbid, we come in negative, yikes. Then the Fed might pivot, and we'll watch the Fed watch tool tomorrow. If all of a sudden they go from 66% pause to then down to 46%, well, that's a big shift. And maybe this continues to decline in the pause camp and then rally in the cut camp. But ultimately, it's what does price do with this information? Because the markets might take a positive non-farm as, oh crap, the Fed's not going to cut. We can't, we pricing all these rate cuts and they're not happening. So maybe the market doesn't like it, right? Or maybe the Fed comes in, or maybe the numbers are so bad that it's yep, this really is a recession and the markets don't like it. I don't know. Let's watch and see what price does tomorrow. So, NVIDIA earnings, non-farm payroll, watch the futures market. We'll come and tackle it tomorrow morning. We'll calculate our stuff, do our routine in the morning, and try to grab a few bucks. They didn't cancel it. They are going to release the September jobs data, but not the October. The October is not going to be released until later. So they canceled the October for now. It's going to be probably delayed until December. But the release will happen tomorrow. It's still on the calendar. It's going to be the September jobs numbers. And at that time, I would imagine that the September job numbers weren't great. You take a look at market breadth, you take a look at some of the inflection points we've seen in the market this year. I wouldn't imagine that September is going to be gangbuster jobs. It's this, I don't know. I think there's been a pretty big inflection point in September. October onwards, market breadth, we hit the peak. I don't know. We'll find out. So let's see what happens tomorrow. Okay. You're all welcome to join. Like I said, 9 a.m. in the morning. I'll be live on youtube.com/financial wars. I'll be live on my Zoom channel. If you follow my Telegram, you can have the link. Here is my Telegram right here. There we go. So Chris Pulver Telegram. And if you'd like to join me for my daily sessions, here we go. Daily profit plan, 9 a.m. Eastern time, Monday through Friday. Cool. So, all right, I'll let you go for today. Let's see what NVIDIA does. U.S. labor market in the morning, see what the futures market does overnight and in the morning, and we'll come back and tackle this mañana. Thanks for coming in, tuning in. Click that thumbs up button, subscribe to the channel. Did everyone, by the way, when I have people come into these rooms, are you subscribed with like notifications? Do you see that I posted something to YouTube? Sometimes when I do a TradingView video, it's been weird. TradingView has not allowed my recording to automatically post to my YouTube channel. So if I go live, I'm live here. If I go to videos, like my TradingView does not post on my YouTube channel. So what I've been doing is actually going to posts. So if you are a subscriber or follower of me on YouTube, this is the one that I posted here 4 hours ago. So there's my link to the trading video. There's my thumbnail. And also there are my notes. So every week or so, probably every week, I'm doing like 1 or 2 videos a week for TradingView. I just want to make sure, like, if you're a YouTube follower, you can still get these posts. I also post them in my Telegram right here. So there are the notes. There's the link. There's my TradingView video. I just do that because they pick me quite often for like a top editor's pick, and so they have some restrictions where I can't show like third party stuff. So I just keep it all in the TradingView charts. But I like to do the videos, and they're usually like 15 minutes or so. Okay, so you get the notification when you stream. Yeah, when I stream, but also if I just do a post like this in my on my channel. So post to my channel. Do you get that notification? Maybe you do. I hope you do. All right. Appreciate that, J44. Always hit the like button so everything you post comes through as a notification. Excellent. Love it. Love it. Cool. Yeah. I mean, if you like the content, subscribe and get notified. So I'm a subscriber to my own channel. I know when I go live. All right, cool. I'll see everybody tomorrow. Yeah, the shorts come through. Yeah, I post those shorts. Those get repurposed through my Restream app. They trim up some shorts for me, which is cool. But it's weird. Like, TradingView is like, hey, just download the video and then post it. Well, they give me a weird format. I can't even convert it. So anyway, I just take the video link, post it in as a post here on my channel. So you can still see it. If you're in my Telegram, you can see it. If you're in my Discord, you can see it. If you're on my Twitter, you can see it. So it's out there. So if you're a follower, you get it. Cool. Thanks, Tom. All right, everybody. Have a good rest of the day. I will see you bright and early tomorrow morning. Let's see where the dust settles for NVIDIA. That's going to be a big deal. Let's see if there's anything post-market right now. Not really. So yeah, I'll read. I'll see what StockTwitch shows. We'll see if something's trending. They will probably beat. If they beat, the question is it a gap higher? Does the market actually like it, or is it like they beat, market's not impressed, and we're just looking at like a big indecision candle for Thursday? We'll find out.